Today we're going to look at footprint and how to use footprint to precisely identify levels to get in at. And this is going a little bit more in depth than just simply looking at a candlestick. Using candlesticks, you identify levels as recent highs, recent lows typically. The real entry point, particularly on a test back of a level, is going to be more to do with where the control shifted between buyers and sellers on the first move. So rather than saying, right, the level is down here at the low, it's actually more likely on a retest to be somewhere slightly higher. And that's the point where control shifted, that the buyers really took control of the move. So if we go and have a look at the example here, what you're seeing then is a level getting created, and then I'll show you in a moment that level being used and a reaction to that level. So what you've got is the first minute in oil. Market sells off, and so on the footprint there's 3 boxes I've got marked up. The upper box ranging from 42 down to 29 area. What this is this is showing you that sellers are completely in control. You can see all the action is on the side where sellers are hitting into buyers and they're taking them all out. There are no buyers staying there and there is no buying. So this creates an imbalance. Great, so there's the control from sellers. Sellers are completely in control at this point. Now lower down from here, the sort of 21 to 15 area, now it becomes more equal. There's a lot of buying and a lot of selling, which is where you're seeing that depth of color between the two sides, the blue and the red. So the market's kind of evened out. We've finally dropped far enough that buyers are willing to stand in the way and they're getting hit. Now what's really crucial is that's not the low. The low comes in somewhat further down, around about 0.5. The turning point though, and this is crucial, the turning point comes in that very lowest box, 15 to 11. Now what's happened here is the market trades down, it finds some equilibrium, trades a little bit lower, and then buyers push this back up. Now that's fine, that doesn't mean buyers are in control yet. But where you have that complete lack of trade around, or not complete lack, but very low volume of trade around 15 and 11, what this is showing is that now buyers have pushed it back up. Nobody's stepping in the way and holding it down. So sellers have lost control, even without necessarily showing it that they've got pushed out of the way. Market then starts to reverse. We move very smoothly through the 15 to 21 area and then gravitate straight up to that zone where sellers were not there. That provides you a great target. That zone up between 42 and 29, that's where sellers had control previously. So in moving back up there, that can be a first simple target if you're playing this as a scalp reversal trade. What we get after this is a retest a couple of hours later. And so if we go and have a look at the second footprint, what we're getting here is using the previous action, using the footprint to be able to say, right, this is where the turn happened. And where did it happen? 11 to 15. On the retest a couple of hours later, the point of reaction comes exactly there again. It doesn't reach the recent low. So if you're waiting down at 0.5, 0.6 area, you wouldn't get filled. But if you've got a footprint to identify that change, there you can be looking at 15 to 11 for your entry point. And then again, as you can see, sellers have tried to come in and you get this big absorption, that big blue block on the footprint. That's sellers trying to hold the market down and buyers just hitting and hitting and hitting. Once they're through, incidentally, that comes at 21. So again, it highlights the same action that was going on previously. You know this, and if you've seen the footprint on the first drop, you're ready for these levels. You know the levels to be looking for. Get through that and straight up once again to that sort of 40 to 42 area. This is how you can use a footprint to precisely identify entry points and enable you to scalp these quick bounces. And often in markets like oil, 20, 30 ticks can come very, very quickly. And a footprint gives you that precision. There you go, that's how we use a footprint. Click on the link below. I'll be doing a workshop on how else we use a footprint to understand the implication of a crowded market as well. So come join us there. I will see you all very soon. Click subscribe, of course, click the notifications, and I'll see you in the future.